Dude, this was the most hawkish FOMC we've had in a while, I feel like.
Yeah, I think the what made it so hawkish, right, like in meeting terms, it was not significantly different than the prior few meetings, but it was hawkish against expectations, right? Expectations were really just or gunning for a September cut, and basically the soft signal that September was going to be a live meeting and that the Fed was going to take this meeting to prep the market to cut at the next meeting. And that pretty much did not happen at all. Powell walked that all back. Powell was very hawkish at points, pointing to the fact that, in so many words, Powell basically said, look, the economy's chugging just fine. Growth is doing just fine. We're seeing some stress in labor, but the labor market's still in balance because any weakness we're seeing in hiring, we're also seeing in firing. So essentially, you're having this labor market declining imbalance, which isn't necessarily problematic. Then Powell also reiterated that inflation is still above target, and the Fed still has a large degree of uncertainty. Now, there was some dissent at this meeting, so there were a couple of Fed members out of the 12, too, that voted against the hold and rather would have wanted cuts. All in all, the situation here is quite simple. The Fed may have some internal debates. We may get a September meeting rate cut, but the odds have fallen and the market's taken some of that dovishness off the table. Now, is that problematic for equities? And I'm going to circle back to the Ledger post that I wrote on the website again. I don't think the market really cares that much about tariffs anymore, nor does it care about rate cuts as much as I think a lot of people wish it did, right? I mean, the effective tariff rates are not down significantly. They're still up significantly since the start of 2025. Yeah, they're gyrating between the estimated highs and where they are now versus the start of the year, right? But the effective tariff rates are still up significantly. The Fed is on a terminal basis, right? If we look at the terminal rates, the Fed is like no more dovish than they were pretty much they're at some of their most dovish levels of 2025, but they haven't broken down, right? If you look at the implied forward curve of where interest rates are going based on the futures market, like we're still well above the 2024 panic lows, which was when the Fed was getting real dovish when they started cutting rates because the SAM rule triggered.